Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining us. I'm your host, Lance Pederson. This is the Real Estate Risk Report. So today I have with me Monick Halm. She is the founder of Real Estate Investor Goddesses. How are you doing today, Monick?
I'm great. I'm happy to be here.
Yeah, we're happy to have you. Thanks for joining us. So I'll let Monick kind of give you a little bit of background on herself, but she has been active in the space and has sort of built a community, hence the name the Goddesses. So we'll let you kind of speak to that, but sort of carved out a niche and does a lot of education in the space and with real estate investing and those sorts of things. So maybe give us a little background on how you got into real estate investing and what led to sort of the formation of your community of investors.
Sure. So I got into real estate completely by accident. Growing up, I'm a first generation American. Great parents always told me I could be anything I wanted, but in parentheses, as long as I was a doctor, lawyer, professor, engineer. For them, that's what they knew as success. So that when growing up, that was what I looked to do. Mm-hmm. And I was a good student, dutiful daughter, ended up going to college and law school, ended up in a big law firm, making six figures, was miserable, hated being a lawyer, but that's a whole other conversation. The only thing I'd been taught about real estate was that you should buy your own home. And so in 2005, I went to buy a house, and I live in Los Angeles, super expensive market, even way back in 2005, it was towards the top of the last bubble, and a starter home in a semi-decent neighborhood. I'm not talking about Beverly Hills or Bel Air, but just like a neighborhood where you're not going to have drive-by shootings kind of thing. Yeah. We were looking at upwards of $600,000, $700,000. And even though I had a six-figure salary, it was a low six-figure, and I couldn't do that by myself. So a friend of mine who was in a similar boat suggested we buy a duplex together. The original idea was that he'd live on one side, I'd live on the other. And we ended up finding this one property that we fell in love with. It's an old craftsman house. It had a bigger unit downstairs, a 2-bedroom upstairs, this converted garage in the back. And we ended up just each taking a bedroom and then renting out the upstairs, renting out the back house, even renting out our basement. And I started house hacking before I knew that was a thing. Mm-hmm. I was just like, this is awesome. This is cool. Yeah. But it was not intentional. And I still didn't even really think of it as a way to replace my income. But I ended up meeting my husband. Well, the man who would then become my husband, he had a duplex. We ended up getting a single family rental together. After the crash in 2008, 2009, we ended up flipping houses when houses were on sale. And then in 2015, I learned about bringing groups of investors together to purchase larger properties, syndication. Mm-hmm. And so at the beginning, like January 2016, I went to my first syndication seminar, and I was like, stars aligned. I was like, yes, this is what I want to do. And so we started doing that and buying, multifamily, and we have a mobile home park, an RV park, and a single family portfolio and industrial properties now. Mm-hmm. So that's how I got into it. And then in terms of Real Estate Investor Goddesses and how that was formed, it actually, the impetus for that actually started at my first syndication event. And I was at this event, it was a Friday and Saturday. Sunday morning, I'm at the hotel gym, and I'm on the elliptical, just like playing through the weekend. And one of the presenters talked about, you got to build your brand, build your network. Who do you want to work with? And I was thinking back on that room that had 120 people in it, maybe 8 of which were women, 2 of which I think were working in the back. So there were just no women in that room. And it just came as this divine download, like bring women in that room. And my mission to help 1 million women create financial freedom came then. not the how. I had no idea of how I was going to do it, but the what of it, again, everything aligned. And it was like, yes, this is what I felt like this is what I meant to do. And so I just went on this mission to try to bring more and more women into this space. I remember I Googled and there was like nothing at the time. And so this is how Real Estate Investor Classes was born.
Yeah, no, it makes a lot of sense. Like I said, you're the first female guest we've had. So, it sort of points to, much of what you probably saw in that room, right? Like what are we, 30 episodes, 35 episodes in, and we've got one female represented. And to be honest, we were trying to, we were actually intentionally, we were trying to find women to be on the show. So it even shows, even when you go looking, it's not easy to find women in this business. So I think that's great. And I think that too, it points to, it points to something, when it comes to the space, when you go back, right, the way that the whole thing typically worked, you hear the word syndication a lot, and it's become, like syndicate real estate or whatever. And, and a lot of that was ushered in, right, because of the Jobs Act, and they allowed, people to publicly advertise and solicit these investment opportunities, and up to that point, of course, it was, they were all club deals. Like, it's just, they were done in their location that, the operator was in their own city and they were a member of the country club and they met people and just deals. That's how they got capitalized, was more of just locally. And so the moment in 2013, we're all able to sort of, more openly discuss investment opportunities, which to that point have been, prohibited. I think it started to it's obviously the same time with the internet and all this stuff, and the world is flat, right? It's just now all of a sudden it allowed all of this free flowing of ideas and people to start connecting with one another and sort of, building these groups. But I think that fundamentally it's so interesting, right? Is that that's what it took for it to sort of start to take off. But when you think about it, and I think you're well aware of this, right, is that the most successful people in this business at capitalizing, their deal flow on a very consistent basis, more than likely have some sort of educational platform that they use to bring in, because they've got to create awareness and they've got to educate, and then you can start talking about the opportunities. And so the funny thing is that was open to everyone even before the prohibition was lifted, meaning anyone could have done that before, but for whatever reason, it just wasn't as prevalent. And it's not to say that it didn't exist. And I can speak for ourselves in our own, investment shop at Fairway America. I mean, it was the same thing for us. Like, yeah, great, we can advertise and solicit, but then we quickly found ourselves, everything was about doing live events and educating and having webinars about how to conduct due diligence on a fund. And, we weren't even talking about trying to sell the fund. We were trying to educate and inform about, how you would approach these things. And of course, that's where we built our own community, was around the same. And so I think that, it just can't be overlooked, right? Is that it's that same formula for marketing any product or anything, is that if people don't know you exist, then they can't do business with you. If they don't understand what it is that you're offering them, then they're never going to buy it. And the value you can add, and the most powerful thing, is to educate. And I think that's the other trend we've seen too, is just many people, whether it was pensions before, they weren't in charge of their own finances, right? And then you had the whole 401k and the independent IRA accounts, and now they can start making their own investment decisions. But most of them had wealth managers or someone else managing their money, and they never took it upon themselves to educate themselves about how to manage their own investment portfolio and finances. They put it in other people's hands. And so I think that, when you look at all these trends, right, is that's what it's trending towards, is people are taking ownership of these things of like, I'm in charge of my financial independence. And if I want to be financially independent, then I need to do something about it. And it starts with education. So, for you, obviously, of having that aha moment, like, hey, syndication's great. And my guess is that through that seminar, it's like they're blowing your mind with complex stuff, like, legal stuff. And it's crazy, but you had that aha moment on a Sunday morning, like, man, there's no women. Like, women need to know about this. So for you, what have you found is sort of that? I mean, it's as much emotional, right, as anything. Is it not? Like for someone to say, hey, you can do this. Like you can invest your own money and you can take control of this. So maybe share with us like how you like how does that work? Like is that hard for people to kind of make that leap of, okay, I can do this on my own?
Oh yeah. I mean, I think it's like me, and most people are taught, they're not taught anything about this, right?
Yeah.
So most people are taught just you get a job, right? You go to school, you get a job, and then if they're taught anything about investing, you have your 401k, you have this very limited menu of things that you'll put your money into, and then that's what you do, and there's not very much education. I mean, now it's more and more self-education around it, but for most people, they don't see this as possible, or if they do think about being a landlord, there's all this stuff about being a landlord too, right? The tenants, the toilets, the termites, the calls at 3 a.m. Like this is what most people think it will be, and having to evict people, and they're just like, that seems like a lot of work and not very fun. And so definitely I think with regards to women in particular, but I think everyone, there are three main reasons why they don't go into it. One is that they don't know it's possible. Right? They just don't even know it's possible. Like until somebody told me in 2015 about syndication, I'd never heard of it. I didn't know anything, and I'd been investing for 10 years in real estate. I didn't even know it was a thing. So but so that's the first thing. And then the second is that people will know, okay, there's this thing, it's real estate, but how do I do it? Then the how of it, they don't know. And then they don't know where to start. And then the third thing, and this I think is a main factor, especially for women, is that they know that it exists. They might know even the steps to take, but they're afraid. You were even talking about that before we hit record. You're talking about all these successful entrepreneurs, they're like, they have money, they could be investing. They're just terrified that they're going to lose their money. Yep. And they're terrified they're going to trust the wrong person. They're terrified they're going to make mistakes. They're going to lose their shorts. And so a part of what I do is, educating them, A, that it's possible, B, the how, and then C, the mindset piece, the getting over the fears, and then helping people feel comfortable and safe and secure enough to be able to take those steps and get into action and start investing.
Yeah. Yeah. And I think that it's, the other trend, and we talked about before we hit record, and I've been talking about a lot lately as well with other guests, but it's the fact that, the good news, right, is that it's the inefficiency of these real estate markets. I mean, real estate's everywhere, and the markets are fluid, and, people are leaving California and they're going to, Austin, Texas or whatever. Right? I mean, there's that fluidity, and then you've got the whole, areas that gentrify, and it's like a living thing, right? But it's everywhere, and the fragmentation is a feature. Right. And so, and to be a really good sort of active real estate investor, it still is local, right? Location, still applies to real estate. And so syndication's great and all those things, but when you pan out and look at it, it's very, very, very fragmented, right? And so it is this thing takes hold and people realize, and there's doorways or entry points or access points into these types of opportunities. And once again, when a market's inefficient, which is what that leads to, right, is that there's only so many skyscrapers in downtown LA. LA is a huge city. It's one of the largest, but it's finite. Like it's and it's not for a 4-digit number. It's not even, it's finite. And, and those are the things that trade, those sorts of assets trade hands amongst, institutional investors and those things. But it's the inefficiencies that, as much as anything, and obviously the use of leverage, that can generate sort of these outsized returns. But fundamentally, even at that, it's an execution game, right? It's about an operator's ability to reposition an asset or to see an opportunity and to execute. And execution, as we all know, is time consuming, right? And to be good at that. I mean, it's for every deal that gets done, there were 100 that didn't pencil or whatever. I mean, it's just, everyone says that, but it's real and it can't be overlooked. And so I think that, as investors come in and there's these entry points and these access points to opportunity, it's what's also happening is that there's a rising up of people like yourself, Monick, that sort of bridge that gap, right? One, that they're helping to educate and bring more people in, right? So that's needed. Without it, it needs to happen, right? So when that's happening, that itself is time consuming, but then also building those relationships downstream with worthy operators. I mean, those operators who have deal flow, and that process, is so valuable. So of course, for me, what's near and dear to my heart at Verivest is we're obviously back office, middle office administrators, and we run a lot of that stuff, to the administrative things that are hard, make that a variable expense, but also, like the verification of these track records and running background checks and sort of the validation points and then the ongoing monitoring. But fundamentally, the piece that needs that we can't solve for and certainly not interested in solving for, right, is the fact that who's out there building the relationships with the operators, based upon information that we can help sort of shortcut the time to trust for people, where you go, okay, these guys are legit, they're not crooks and criminals and haven't been, and their track record isn't made up. But then the process of developing those relationships, and then when a deal does come along, being able to actually dig in and push back and on the business plan to make sure that it's viable, and being a separate set of eyes who's not close to it, is really where people like you add value. So maybe if you can kind of speak to that process for you as you're out there in the community and assessing new relationships with operators, how do you go about that? How do you, because I'm sure once people know that, hey, Monick has got a following and they got some money, that tends to make you attractive, in the space. Like, hey, I'd like to have money coming to me, and, she's sort of got a community of people that know, like, and trust her. But how do you do that? What is your process for vetting a new operator or sponsor?
Yeah. So one of my mentors, Beth Clifford, taught me this, like, 3 C's, which I look at for anybody that I want to work with, operators, team members, etc. But specifically with regards to this. So the first C is character. So how, what kind of integrity do they have, character? And so finding that out, right, that has to do with some, due diligence background, and you see what they've done. But then also, how do they treat people? How are they in integrity with what they say they'll do when they say they'll do it? So I see that in little or big ways. It could be something like, oh, we're out. How do they treat the wait staff? How do they treat everyone else around them? To just how are they showing up in terms of being responsive and giving what they said they would do in little ways. So I look at how people, what their character is, because you can't teach character, you can't change character. So that's the first one. Next, I look at commitment. So that's the next C. And commitment has to do with a couple of things. So first, commitment to the project, and I can see some of that with their commitment to their track record as well. But what is their commitment to this project, and also what is their commitment to our shared mission, vision, values? So, like, one of my values is that I only want to invest if we can leave a property in a community better than we found it. So somebody who has they're willing to be a slumlord, take every dollar out of a deal kind of philosophy, not a match, right? That's not like that. We're not having a commitment to that same value. And I also have a commitment to relationships for life. So I want to work with people again and again and again. So I'm very long-term thinking in terms of my relationships, not transactional. So I also want people with that same commitment. So I'll look at that in terms of their, so these are a little like softer skills, but this is very important. And then the last one is their capacity. So I having learned work with the best, they won't cost you money, they'll make you money. So just like who's really, really good at what they do in terms of their experience and their track record, trying to work with the best that, in the field for what they do. So those are the three C's that I look at, and in that order.
Yeah, no, that makes sense. Yeah. And I think it's like, another C that I like is conviction, right? And I think it kind of wraps up into some of what you're saying, but it's just the people who, there's a method to their madness. And I think that's just it. Like slumlords don't have conviction, they don't have that. But, like I had Freddie Ellis with Watermark Properties, and these guys build to rent communities, right? But it's not just about building some homes and renting them out to people for Freddie. It's not about that at all. It's about the fact that they get to build a community and bring people together. Like that's what he gets psyched about. It's conviction, right? Like it's like anyone can build a house. Anyone can build a house, right? And frankly, a lot of people could build a rent community if they're really good with municipalities and they can navigate that and whatever. They could do that too, right? But not everyone has conviction to build the great community where families get to live. I think it's the same thing with mobile home park operators, whatever. There's a lot of them are just like, dude, we're going to go in there, we're going to push rents, we're going to do whatever. Like, once again, like I'm a capitalist, man. I'm not judging anybody, right? But there's others who look at it, they have conviction. And they look at it like, you know what? Some people, this is their lot in life. To live in a mobile home park, it's a community. It's another thing. Like they look at it through a different lens. And, and once again, I think this is it. It's going on all over there, but to figure that out, to figure out the people who have that conviction and who have sort of those things, once again, not everyone has it, but just the process of determining it is easier said than done. And, and then it does come down to, at the end of the day, the deal. I mean, like, does the deal make sense? Because it is analytical. And we say it all the time is you make your money on the buy. And it's true. If you overpay for some property, it's going to be really, 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 really hard to, unless you just end up getting super lucky, you're kind of stuck, it's hard to come out of that. And so maybe you can speak to that as to how, when you've built those relationships, you feel good about the people and, those things are in place, but now they bring you a deal, right? What's your process? Like, how does that work for you? And when do they get you involved, and what if you don't like it, and, those sorts of things?
Yeah. So if I don't like it, I'm not in, right? Yeah. I can love the people and just not love the deal. And that's okay. It needs to make sense for, the numbers need to make sense for us. It needs to make sense for our investors. And so I'm not, my partner is the one who's more the due diligence numbers guy. I'm more the relationship builder. So I'm not looking at the numbers, but I'm letting him do it. And when it makes sense, like, okay, let's look at that. Then we'll review the deal. But looking at the location and the market and the trends and the assumptions that the operators are making, right? It's like, this exit cap is a little like optimistic, or their projections on the rent increase is a bit optimistic, right? So these are the things that we'll look at, and if and most of the people that we work with, they're pretty conservative. We look to under promise, over deliver, and things could happen, like, I don't know, a global pandemic and a nationwide rent moratorium, like eviction moratoriums and rent increase moratoriums and things like that can happen, and that will definitely affect numbers and performance. But we'll do our best to be conservative, and to see if conservatively, if it makes sense, then we'll move forward.
Yeah, no, it makes sense. Yeah. And it is always hard when, someone comes up with something. It's just, well, I see what you're doing. And even if they do sort of sharpen your pencil, it's like, it's not feeling it, right? Like that's just, going to pass on that deal. And and I think that's just it. That's why I love seeing what people like you are doing. And I just think that it's the formalization of this, that it keeps it all these things sort of keep everyone honest, so to speak, right? Like, because then it's you don't get to fall in love with your own deal. You don't just get to raise money from dumb money, right? Because that's what can happen if we're just being honest, right? Is that if there's no one there that sort of knows how to scrub a deal, then people just start putting money in and don't realize that, well, yeah, maybe those first few deals were pretty good, but that deal's kind of garbage, and they just did it because they, knew you'd put money into it. Having groups like yours sort of in play, it inherently creates this. There's someone on the other side of the table that's representing some people. Because I do think that over time, of course, that some of the people that are in your group and in your community, they may get to the point where they themselves become really good at assessing the quality of a deal and, that sort of thing. And, they end up forming their own group or whatever. And I think and it's just like the whole thing's a virtuous cycle. Someone starts as an analyst at an operator's firm or whatever, and then they get into acquisitions and they're negotiating deals, and and the principal used to do that. Now the principal's sort of on the golf course. And eventually that guy is going to say, what? I can run my own firm, and then he's going to go start his own firm. But it's just like the real estate itself is just this living, breathing thing. And it's cool for me, obviously, having been in it, a long time now, is just to see this ecosystem maturing. Right. And because that's, for us back in 2012, when we started, our whole thing was for a flood of capital. Our mission was like to help create a flood of capital to worthy real estate entrepreneurs in the United States. Like, that was our mission. And it's cool to be, in the place we are here, 8 years later or whatever, where it's like, that's still what, like, our North Star. And it allows even for the things like this podcast, or to have guests like yourself on or whatever. It's like, this all feeds that. And it's not always about, the mighty dollar. It's about, hey, rising tide does lift all boats. How do we get more people into this? It's good for everybody. So in terms of, I always like to ask this question. So, you've been around long enough in the real estate business. You obviously survived the first sort of the downturn and, kind of rose up through there. But what's like any good juicy stories for like implosions or deals that just went like completely sideways that either you did or you kind of like adjacent to, or deals that maybe you looked at that you didn't do that then blew up, and anything in that vein?
Oh, yeah. So like, which one do I pick? Okay. So yeah, one of our first multi-family deals, we'd bought some properties in multifamily in Albuquerque, New Mexico. And so here's a bit of advice. Don't buy in any property in any area that's considered the war zone. It seemed like things were shifting, right? There was signs of gentrification. There was right across the street, there was a new Starbucks and a Planet Fitness, and so there were signs that, okay, this neighborhood was up and coming. It was not there yet. So having bought this property, we did have drive-by shootings. We had our property manager held up. We had squatters that were heroin addicts. We had fires. It was just like everything. Every time we called every week, we talked to our property managers and sort of like, oh God, what are they going to tell us this time? Like, oh my gosh. And, and we looked at certain parameters, but we had that it looked like we were buying the right place. So the sort of outside factors were there, but we could not turn this place around. And it was literally a miracle, a prayer that saved our butts. We were there. I was flying back to Albuquerque. Like, okay, let's see, because our CapEx was kind of running out. We'd put a lot of money, like, fix it. Like, what can we do to make it nicer and get the better people in there? But that neighborhood had just it had a bad reputation that was not shifting. So But I literally was on the plane, like praying, like I need a miracle just about now. And then we get there, and our property managers take us out to dinner and say, "Would you consider selling?" We're like, "We'd consider it for the right price. We do have investors."
Yeah.
And so they said, "Well, we have a 1031 exchange buyer, and he's looking to be interested in buying your property." I was like, "Really? Okay." So we penciled it. This is the number we need to get, which was like a crazy number. It's like a 4 cap for this really crap property in Albuquerque, but he took it.
Yeah.
Anyway, so that was like a miracle that we got out. Our investors made money. It was fine, but that was not fun. That was not fun.
Yeah. See, that's it. They don't all work out, right? And that's just it. Hence.
I was just like, but
yeah. But that is, it's just, that's the sort of thing, right? Like it's the, you never know. I mean, that's it's like, you feel like the things are going there, and those are things that are out of one's control. And I think that, like, to your point on the character stuff, is just, see, that's just it. It's like, it's not if something's going to go wrong, it's when it goes wrong. And, and that's really what assessing if the operators, the people in charge, have that. Are they going to run away when the going gets tough? Or are they going to dig in, and they're going to, they're going to get after it, right? And they're going to figure out, how to make this work, right? And like you said, it's just, those are the things they're hard to pick up on. But I go back to, like, I see that is why that the value of people in your position to make those assessments and and figure those things out is just so important. It's just like hiring people, right? Like, I mean, most people, they say, it's like, I don't know, 8 out of 10 hires are like wrong. Like, you get it wrong. Like, and it's just, so like that's not a very good batting average, right? Of hiring. And I think that it's the same thing with operators, that ostensibly you're putting money into a project that you don't have much say over. Picking the right operators is a big part of it. And the character and how they'll react if something doesn't go their way, that's a unique quality that not everybody has. And that's, I think that's what integrity is ultimately. And it's hard to assess. And especially too, with this historic bull run we've had, I mean, not that many people have really been punched in the face, so to speak, and, run into any, big adversity. And I think it'll be interesting here in the next few years to see, kind of how some of these, and I think obviously some operators and have had to deal with some of these things. And, we had some guys who we invested in, that retail guys, that just watching how they sprung to action when they were on the front lines of the, metaphorical war zone of retail, and they just got after it. It's like they were more charged up now to get after it and figure out how to make it work. And it's like, great, but then there's other guys who like stick their head in the sand, like, oh my gosh, we're toast. So at the end of the day, like I tell, it's like, it's relationships, man. It's people. The transaction is trust. It's if you're overlooking that, you're in trouble.
Yeah.
So cool. Well, where can people find you?
The best place is to go to reigoddesses.com. I'm also at REI Goddesses on most of the socials. So REI Goddesses.
Cool. All right. Well, thank you so much for your time. It was a joy having you.
Thanks for having me, Lance.
All right, Monique, take care.